Hey everybody, Scott Riley, the Market Update Desk with Scott Riley, NMLS 157524. We finally, last week on Friday, got a jobs report that was bond friendly. So we saw mortgage-backed securities jump, and we saw the 10-year Treasury fall below the resistance line of 4.12. In fact, we settled under 4.10. This was a great move to the positive. We're seeing mortgage rates trend to the lower sixes right now. In fact, it's time to start talking refinances. Now, this week is a biggie because it's going to lead up to next week with the Fed decision. Now, Tuesday, we're going to get the very important QCEW. That's the quarterly census on earnings and wages, and this is for the Q4 of 2024. This is going to be real important to follow because it's going to be a true up from the numbers that were reported and were revised. We're probably going to show a couple 100,000 to the downside on the QCEW for jobs. Then Wednesday, we're going to get mortgage applications and producer price index. Thursday is the other big one for the week. That's going to be CPI consumer price index and jobless claims. So right now, the forecast for both CPI and PPI are to come in at plus 0.3. If we can stay within that range and we get the QCEW where we think it's going to be, there is definitely a line downward resistance for treasuries and up for mortgage-backed securities. In fact, this morning, mortgage-backed securities are up 18 basis points. 10-year treasury have fallen another 3, and we're sitting at 4.04. The line of resistance right now to the downward side for treasuries is 4.02. If we can get through these next two reports, we're going to then get to next week's Fed decision, which will be to more than likely a decrease of 0.25%. I don't think they're going to come in at a decrease of 50%, or I'm sorry, 50 basis points. But the commentary is going to be very important to tell us, will there be 2 or 3 cuts this year? Right now, they're talking about a forecasted cut this meeting, and then in October, and then a 20% chance of a quarter cut in December. So we got a very big week, very important, talking about rates and refinances. If you bought in the last 18 months, it's time to start talking about getting prepped for refinance. This, along with the housing value increases, you could save not only on your interest rate, but if you bought with mortgage insurance, you could potentially lower it or eliminate it and maybe move from FHA to conventional, where the mortgage insurance potentially could be dropped and save you money. So let's talk about saving money. And now also buyers, get ready. If these rates drop to low sixes, maybe high fives, that's going to be an opening of a door to more buyers coming in the market, which means more competition. More competition means potentially higher prices and more offers per house. While we will get more homes on the market from sellers unlocking from some of their interest rates, that's not going to be as many as what the buyers will come in the market. So we potentially could be more unbalanced with rates coming down. Give us a call. We'll run some numbers for you, help give you the actual data so that you can make an informed decision. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. It is a great afternoon. 616-293-2189.